Hey guys, how we doing? Yeah, I'm going to be talking today specifically about what's going to be happening next week in the stock market. And probably what we're going to be seeing is the stock market is going to be dropping like crazy, and I want to be explaining exactly what the situation is and why that is happening. And at the same time, I'm also going to give you something that has a 95% chance of success, and that's going to be later on in this video, so stay tuned for that. Now guys, I'm going to be discussing in this video three main things. The first thing that I'm going to be discussing is basically rebalancing of portfolios. Second, I'm going to be discussing about the second wave of and how that is impacting the market. And the third thing that I'm going to be discussing is that short-term trade that has a 95% success rate. And normally I never short trade, but because this is such a big opportunity, I'm going to be sharing that with you guys. Now let's go about rebalancing. What is rebalancing? So basically when institutional investors and pension funds are investing into the stock market, into the bonds, they basically have their portfolio which is balanced towards a specific percentage of investment products. So what does that mean exactly? Well, it means that if a portfolio consists of stocks, it consists of real estate, consists of bonds, basically they need to be in a specific percentage. So let's say all of these three need to be on 1/3 percentage to be balanced. So what happens if one of these sections goes up a huge amount in value, which has happened in the latest quarter, which we've all seen with this huge amount of increase of the stock market, that basically means their portfolio is no longer balanced. So what does this mean? This means they're going to have to sell stocks to rebalance it, and they're going to buy bonds in place or other kinds of investment products in their place so that the whole portfolio is balanced. That makes sense, right? So that's going to have a huge effect on the stock market. And basically what it means is right now in the stock market, they're looking to have a total sell-off of $72 billion worth of stocks, which is a huge amount. So we're going to have a huge amount of sell-off that's going to be happening next week up until the end of June. And that's going to have a huge downward pressure on the stock market. Now, next to that, we have the second thing that I want to be discussing, and that is the second wave of Now, the second wave is coming in right now, and already some of the stores and some of the companies are closing down voluntarily. One of those companies is Apple. They've basically been closing down their stores in areas that has basically already been infected too much. But other companies are already closing down other shops, like Microsoft is recently closing down all of their shops due to so it's basically having a ripple effect on all kinds of different stores again. So that's going to have an impact on stocks, because when the stores are not open, the customers can't buy. But as recently, there's been a huge amount of push to e-commerce. This is not going to have the same effect as it has with the first round. So the effects are going to be less harsh and less direct towards the companies itself. They're already much more prepared towards this situation. Now, those two things combined are going to have a very big downward pressure onto the stock market. So if you're right now into stocks, and you're doing options or anything like that, put options is a great opportunity right now. I don't do it myself, but if you're going to go for it, put options is a great opportunity right now. But what we also need to keep in consideration is that this is going to be a temporary downward pressure. So that is jumping into my third point, which I wanted to discuss, and that is that huge opportunity for a 95% gain, and that's called the 4th of July trade. Now, Larry Williams is actually an investor that has been out there for a huge amount of time. He's also been a congressman. He has a lot of different things that he's been doing, so he has a huge reputation he's built. But one of the things that he's known for is the 4th of July trade. So I'm going to be taking you together with me on my computer, and basically what it basically says that if you trade specific days before the 4th of July, there is going to be a specific return that you're going to get in a very short amount of time. And the success rate is very high considering the trade that you're doing. So let me go through it with you. So what it says is if you buy 6 days before the 4th of July, you on average win 57% of the time if you buy the S&P 500. And sell it on a very short term. So 57% of the time. But in total, you have a losses of $14,712. If you buy 5 days before that, it's $8,262 that you're losing and a 66% chance. So that's not really beneficial at all. But what we've been seeing is the closer that you go, the higher the probability of chances that you can win on this specific trade. And this trade has been going on for 21 years and has that reputation of success. Now, 4 days in between, you have $2,350 profit and basically a win chance of 80%. 3 days, it's $8,512 with an 85% win chance. And then if you buy in the 2nd of July, you have a chance to win a profit of $14,650 with a win chance of 95%. Now, 2 days in, you have $14,650 that you can win with a win chance of 95%, which is incredible. That basically means there's almost no chance for you to lose on this one. So, as this has been a win streak of 21 years, this is why I wanted to share it. This is a short-term trade. Normally, I never do short-term trades, but as this has such a high probability of winning and has a huge track record of going through it, I think this will work very well. And one other reason, if you go back to the points that I mentioned, the first and the second point, where we have the rebalancing what's happening right now of the portfolios, which has a downward pressure until the end of this month. So July is going to have an upward pressure because people are going to be buying stocks again. The second is that we have the corona cases right now that are pressing down a lot on states, which I think is going to extend to the beginning of next week. But in beginning of July, it's going to get an upward pressure again. Then those three things combined, I think this is going to be a very good position to buy, either long-term or short-term. So I am going to be buying on a long-term basis on this specific day with a huge amount of my capital on specific stocks that I'm looking to invest in. And that's why I wanted to share this video with you guys. I'm going to be buying on the 2nd of July. I think there's going to be a huge amount of upside towards it. And that's why I'm going to be buying. But if you're looking to short-term it, basically what you need to do on this day, you buy it on the 2nd day, you set a stop loss order. So that basically means that you prevent yourself of going down. And if you can set up a trailing stop loss order, that's even better. That means it trails up when it goes down. And when it goes down slightly again, that's when you sell the specific stocks, that you will have a very profitable trade to do it. Now, guys, I'm going to be talking about a little bit more about how to buy stocks and how to start investing. So if you're more interested in that and all of this information was a little bit too much for you, watch these videos here. And guys, if you like this content, subscribe to this channel and smash that like button so that I can help it grow further. Thank you for watching.